The AIM market was launched in 1995 as a London stock market for small companies that were growing and didn't really qualify for listing on the main market. It now promotes itself as the most successful growth market in the world, having raised money for 3,600 international businesses. It has on its books now, from those at early stage to venture capital-backed businesses to established companies worth over £1 billion each. But how do these stocks fit into a well-balanced portfolio of investments? Well, Chris Boxall is a specialist in AIM stocks at Fundamental Asset Management. He joins us now with some more analysis about this. First of all, explain a bit more detail about why it is so important, this market, for investment purposes.
Well, I think it's been a huge success. And I know there have been the odd problem stocks, but generally it's been a huge success and delivered, in some areas, material outperformance for investors. It's been a great market for private investors as well, because as you suggest, these are generally smaller companies and where many institutions don't want to go. So private investors who have done their work, done their research, have done really well. And if you're prepared to roll your sleeves up and do a bit of work, you can materially outperform. You know, people are fixated by the moment by indices, passive investing. They really haven't got a clue, many people, where their money's going. They could be holding thousands and thousands, given the proliferation of these indices, of underlying stocks. Here, this is a true stock picker's market. So you do your work, you know your stocks, and you're going to do really well, which has been the case over the last few years. Stick to the things you know. I call it kind of experiential investing. If you experience things that you know, you're going to see them perform. And that's a great example has been AIM for that.
Do you think AIM has lost its focus? Because I said it was traditionally for small companies that were growing. We've now got 10 companies, I believe, according to your research, which are now over £1 billion. I think ASOS is the biggest at about £4.8 billion.
Absolutely, yeah.
Do you think it's lost its focus a bit?
It's a good point. I think it is a surprise. It's a surprise to many that, for example, ASOS has remained on AIM. Other stocks, Breedon, which is also another billion market cap business, the quarries, asphalt, construction-related materials. Also, a year or so ago, it said, we might move to the main market. Well, more recently, it said, well, no, we're going to stay on AIM. Now, that wouldn't have been the case previously. It sees no reason to move. So, yes, there is an argument that it's not, AIM already wasn't established for these types of businesses, but they are still companies growing incredibly rapidly. And saying that, the sweet spot of AIM is still the 10 million to 150 million market cap business. That's where the numbers really are, and that's where you can find great opportunities.
Where do AIM stocks lie in the process of financial planning? Who are they most attractive for?
Well, I believe, and they're very attractive for private investors because who can afford to take a little piece. If you're an institution managing billions, it's much harder to invest in AIM. So ironically, yes, they could be deemed riskier, but you've got a better chance if you're a smaller investor than a big investor because you just don't want to go there. They've been a fabulous place for inheritance tax planning, and inheritance tax planning investors represent now a big chunk of AIM. I'm not sure of the exact number. I would estimate it's probably circa 25% of AIM's exposure could be to inheritance tax planning money. If you look through the share registers of many AIM companies, you see a number of managers, in addition to our good selves, who are really focused on IHT planning. So it has been terrific for that, and we have seen a growing interest from intermediaries as well, independent financial advisors, to direct more and more money to AIM. Unlike a few years ago, more and more of these wrap platforms now, the Transacts, Nucleuses, AXA Elevate, Standard Lives, accept AIM stocks, and that wasn't the case 5 years ago, where they were difficult to trade.
What about the performance of AIM against the other benchmarks? I'm thinking mainly the blue chip FTSE 100 index, because I think that's an interesting metric to work against when looking at the performance of this particular sector.
I've always emphasised that the AIM index has been a diabolical barometer, because AIM itself has moved from a market with, at its peak, 1,700 companies to one now that has 967. 967 far better companies than there were with 1,700. The market cap approach is now 100 billion, close to its peak when it had its 17 of 108 billion. So in that, the index has then composed of all of AIM stocks, the AIM all share, and it's been a really difficult gauge. And people look and say, oh, it's been a dreadful performance. All these academics come, oh, look at AIM, it's been dreadful. But as an IHT planning investor, I never touched the really speculative areas. I never touched resources. I only could touch qualifying AIM companies. So if you look at the performance, if you look at the performance chart of fundamental AIM for IHT planning, and we won't be alone. Look, this is great, but others managing for IHT planning, and this goes back to when we started in 2005, and we've been doing it a while.
Let's explain what these three colours are.
So the grey line is the FTSE 100, the orange line is the FTSE AIM All Share, the index I was referring to, and the blue line is a fundamental AIM IHT portfolio, a real average portfolio, net of all fees, inclusive of dividends, that has been managed continually since 2005. So that is a fairly decent barometer of AIM for IHT.
So anybody managing a portfolio or a fund or something should get that sort of outperformance against both.
If they're doing their work and sticking to decent stocks, profitable stocks, growing stocks, if they've avoided the speculative short terms, if they've avoided some of the overseas issues, they should have done really nicely. And going back to that index, the AIM index isn't tradable. How can you have an index where there isn't a fixed number of companies? And it's not like the Dow or the FTSE 100 or the 250. There's a set number of stocks. The AIM index, I don't know how they calculate it. It must be a nightmare. But it's been a really, really good place to be. And look at talking about the outperformers. They're stocks you can easily relate to. I've got 4 daughters. You speak to your daughters about clothing retailers, and they'll say ASOS, Boohoo, and that's basic. You go for a drink. If you like your gin and tonic, you may have noticed that Fever Tree's on offer in more places. That is such basic investing, and it's simple stuff. You experience what you like. You can see the momentum. Just avoid things you don't know about. Avoid all this, the complicated, and yet one should do really, really well in AIM.
Yeah, okay, all right, Chris, look, thanks for sorting out what it is about AIM that's so appealing, but thanks for joining us. Chris Boxall is from Fundamental Asset Management with his view of how important AIM is as a field of stocks to look at as part of your investment planning.